When interest rates go down, what does the stock market do?
When interest rates go down, that makes it less costly to run their business.
Mhm.
So if it's in a vacuum here and interest rates go down, you would think that would lead to more profitability of the stock market. The challenge is profitability in the stock market doesn't always equate to stock price.
Yeah, correct.
Right? I mean, there's that. And then you have to think about what would have had to have happened for interest rates to go down in the first place. People miss this part of it as well. When the Fed drops interest rates, generally what they're trying to do is to pick up the economy. So if you believe that the reason that they would raise interest rates is that the economy is down in a recession, then what you, in essence, what you're trying to do is to breathe life into the economy and in the S&P 500 or in the stock market. So you probably already lost money there. So you got to think about not just the inputs of what interest rates are doing today and what's that going to affect. Look at the big picture, right? Right now, the cost drivers of a business have increased significantly by the Fed raising interest rates over the last year. 4 or 5% increases on every business in America. That is a substantial increase in cost, which decreases profitability. And those effects take 6 to 12 months before they're actually seen in the economy. So those effects are still coming. What that is probably going to do is to decrease profitability for companies, which will lead to less jobs, right? That will lead to less consumer spending, which will lead to a recession and likely won't result well in the S&P 500. And so those who still have their money in the stock market, I know you're saying, listen, I'm down 15% from where it was a year ago. I'm just going to wait for it to jump back up. But the data is saying otherwise.
Okay. So what happens in the stock market when interest rates rise?
Well, we see what happens when interest rates rise, it decreases profitability for companies and it takes a little bit of time generally, but ultimately what the economy is doing is it's constricting, right? Because it's largely been on fire for a period of too long. And that's why the Fed raised them in the first place. So you probably made more money in the stock market in the times previous, but going forward, once they raise interest rates, that's a signal that you have upcoming pain.
Yep. So what happens in the real estate market when interest rates go down?
Let's talk about the recession myth.
Okay.
All right. Big picture, right? So many people believe that in a recession, real estate prices go down, but that's only because they lived and remember the Great Recession, right? But if you actually look back in the previous 6 recessions, only one recession did real estate prices go down in Jacksonville. I'm just quoting Jacksonville right now. And it was the Great Recession. 5 out of 6 recessions, home values actually went up. Again, because what is the Fed doing? When there is a recession, the Fed generally drops interest rates. The asset class that is most affected when the Fed drops the federal funds rate and then long-term mortgages tend to decrease, right? The interest rate tends to decrease. The asset class that is most affected is real estate. Rates go down, demand comes up, and you generally see real estate do well. So the recession myth is that real estate values generally do not go down in a recession. So in a recession, generally rates go down and home values actually perform quite well.
What about when interest rates go up? How does real estate tend to perform?
Well, we're kind of seeing it right now. And the Fed is doing anything and everything it possibly can do to dampen the housing market because it's raised interest rates, right? 4 or 5% in the last 10 months. And home values are still doing quite well in many parts of the country, right? Jacksonville home values are still doing quite well. So home values are not decreasing this quarter. What else do you want to see as far as consistency and stability? This is the fastest rise of interest rates in 40 years, and home prices are still stable here in Jacksonville. Home prices do well when interest rates drop. Home prices do well when interest rates go up. It's this asset class at the core of it. This asset class provides so much utility, whereas other asset classes don't. It provides a roof over people's heads that people are still going to be buying this asset class as long as they need a roof over their head.